Well, the market's looking in good shape and good health as well. But talking about health, let's talk about healthcare. That's been in focus for the last couple of months from a stock market standpoint. But over the last couple of years, the importance of healthcare more so for the world at large. But who better than to speak about healthcare than Aditya Khemka, who's a fund manager currently at InCred, but has been tracking this space for over 16 years. Has covered American, European, and the Indian healthcare equities as well. Aditya, thank you so much for joining in. What kind of outlook do you have, or what do you foresee from the pharmaceutical space now going forward, given that the pandemic is likely to be an endemic, and how much of these gains made during the pandemic are sustainable for companies who are likely to benefit the most?
So basically, my view is that this is a misperception in the capital market, especially that the healthcare ecosystem actually benefited from the pandemic. If you look at the sales, pharmaceutical sales in India especially, 70% of the sales are acute, which means these are diseases which generally happen to human beings when they step out of their original ecosystem, which is their homes. And as you know, during the pandemic, many people did not step out of their homes for a very long period of time, and that actually adversely affected pharma companies. Yes, there were a few COVID products sold, but those were limited to a few companies, a few products. It was not nearly enough to cover for the loss of sales that happened on the acute side. So going forward, I believe that FY23 over FY22, we will see significant growth in pharma sales, especially for the Indian market. We will see a steep price increase as well. So normally the Indian pharma market grows between 10 to 12%, divided as 4 to 5% price, 4 to 5% volume, and then 1 to 2% new products. This time around, I think volume will be 4 to 5, new products will be 1 to 2, but the price can be 8 to 9%. So the overall pharma market growth for FY23 over FY22 could be anything in the range of 15-16%, because there will be a higher price increase.
Okay. Go ahead, Ekta.
Sure, Sonia, go ahead.
Okay, all right, Aditya, hi, good afternoon. I thought Ekta had a question for you. I'll go across to Ekta in a bit. But, I just wanted to understand from you, a lot of the COVID-related, earnings that many of these companies had across the board may perhaps be behind them now, right? So how do you approach them in this post-COVID world? Which are the ones that perhaps still have earnings potential, and which are the ones that you would stay away from?
So look, if you have to corner out a few companies that made decent amount of money due to COVID, it would probably be something like a Cipla, which had some inhaler sales, which was happening from COVID. It would probably be, let's say, a Jubilant Pharma, which had some sales from Remdesivir. But, these, and then maybe a Glenmark, which had some few sales of Favipiravir. But, other than these 3-4 names, the healthcare universe is almost 80-90 stocks. And, these 2, 3, 4, 5 names had some benefit, and IPCA had some hydroxychloroquine sulfate sales in 1 or 2 quarters. So if you just, cull out these 4-5 stocks which had some marginal benefit from COVID, other than that, the non-COVID business was significantly pared down during the pandemic in FY22. And that business is far larger than the sales these guys did in COVID. So therefore, if you see, the first half of FY22, we have already witnessed, some companies growing India sales at 30%, 35% year over year. And that is happening because the acute sales are coming back, which were not there during COVID period. So I'll come back to my point that, the broader market will see faster than normal growth in FY23 to FY22. Companies which did not participate in the COVID opportunity will grow faster than the companies that did participate in the COVID opportunity. And as I said, a few companies participated in the COVID opportunity, which we have already stated. So the way we are positioning the InCred Healthcare PMS portfolio, we are obviously focusing more on those companies that did not benefit and in fact were adversely impacted because of the COVID lockdowns and the restrictions people had in their movements in FY22.
Okay. Aditya, we are running out of time, so I have a two-part question. One is on Torrent Pharma. It was a complete weak set of numbers. US seems to be quite a weak spot for them. Do you expect it to recover, specifically on Torrent? And do you have a view on Apollo Hospitals, considering that there's so much buzz around a possible deal with Amazon, or maybe, you know, any other kind of strategic partnership when it comes to its online business. So do you think that that would be a credible stock to look at from that perspective?
So look, Torrent Pharma, or the US generic business per se, is extremely unpredictable. It's an unbranded commodity market, and we have always stayed away from that space. We are extremely underweight that space, and it becomes very, very difficult to predict revenues or profitability of that space for any given company, let alone Torrent Pharma. So what we believe is that investors are best served staying away from companies which focus on US a lot, because US is just very, very unpredictable as a pharmaceutical market, and especially for generics. And then there is price erosion, there is cost pressures, input costs have gone up. So if companies focused on Indian pharma market will be able to pass on the input costs because they have brands and they can take price increases. But companies focused on the US market may not be able to do so. There are no brands. There is no differentiation in the product. So, Torrent or anybody else, US market will be a tough market to operate in even in the coming year. And we would stay away from names which are highly focused on the US market. As it comes to hospitals, including, let's say, an Apollo hospital, yes, there is a lot of noise around the potential deal with some of the larger e-commerce players. That should not drive the investment decision. The investment decision should be driven by the structural story on the hospital occupancy, the ARPOB growth, the return of medical tourism, the return of discretionary procedures. And I would encourage investors to focus on that aspect of the investment thesis, where we believe all hospitals are very well placed because they were again very adverse due to COVID.
All right, Aditya, thanks a lot for that. We take your point and your advice. Wish you good luck for all your endeavors as well, and we will keep dialing into you for your advice ever so often. But with that, we'll take a short break. On the other side, we have Bharti Airtel. That's the stock in focus after Google's announced its investment in the company, $1 billion. That's confirming a big CNBC TV 18 news break. Details when we return.